Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra and with me is Ekta Batra. Ekta, good afternoon. Well, steady as we go. Markets are up in the green. We have Nifty sitting with gains of 45 points. The SGX Nifty, of course, was indicating a higher uptick. So we have fallen from the highs, but still in the green. But of course, it's the monthly expiry day today, right? So a lot of volatility is what we expect. Last 1 hour of trade will be really crucial. But for now, we are in the green.
Hi Sonal, yes absolutely, it is expiry and maybe volumes as a whole for the week could be lesser simply because of the holiday season, but nonetheless we have a lot of stock earnings and that seems to really be peppering the screen as well, and we're going to take you through a couple of them in the next 30 odd minutes. As of now, these are top stories. Stocks stay ranged after a steady open on expiry day, after a steady open following mixed overnight cues from the US. Metals and realty lead gains while IT and FMCG drag.
NMDC rallies nearly 15% intraday ahead of the record date for demerger of its steel business.
Chennai Petro and PCBL slide after their disappointing showing in the second quarter. Chennai Petro's GRMs take a beating on quarter-on-quarter basis, while PCBL's margins come under pressure.
Gland Pharma tumbles after earnings come in well below street estimates for a second straight quarter, even as it reports a recovery on a sequential basis. All right, those are the top headlines that we are tracking for you. Market moves could be volatile because, as we were mentioning, it's the expiry day. But a lot of stocks that will be in focus as well. The recently listed Tamil Nadu Mercantile Bank is in focus on the back of its quarter 2 results. Lower operating spend has boosted profitability in the quarter gone by. S. Krishnan, the managing director at the company, is joining us now. The stock too has spiked, is up around 6.5%. Mr. Krishnan, good afternoon. Thanks a lot for joining us. Well, loan growth this time around is 11%. Is this something that you will be able to maintain through the course of the year? What is the guidance for FY23? And which sectors for you are doing well? You have exposure to MSMEs, there is agro. Which is the focus area?
Thank you. Yes, the bank has done well in the Q2 and also the H1 of the current year. This is the first time the bank has come out with the results after getting its shares listed in the stock exchanges. The advances growth is around 10%. We will be able to maintain the same or rather little improve. The sectors where I have focus or the potential is the bank is known for its lending in the RAM segment. The overall exposure of the bank in the advances mix, if I look into, around 87% are in the RAM segment. We will be continuing to focus on that. This gives me a twin advantage. One is my risk is well diversified. I don't put all the eggs in one basket. And second, I am able to contribute for the industrial development in this sector. So that is what I will be continuing to focus on that. While saying so, I will also be looking into good corporates on selective basis, where I am able to have the understanding where the risk is acceptable to the appetite of the bank. We will be. I expect the same growth to continue in the H2 also.
Okay, so what might you be guiding in terms of net interest margins and your overall incremental cost of funds? The reason I ask is that while your margins have improved on a year-on-year basis, or versus what you did on a year-on-year basis, there has been a little bit of a decline on a Q-on-Q sequential basis as compared to what you did last quarter. You did 4.47% in first half. What is the second half looking like?
Yeah. See, if you look into my net interest margin today is 4.47. It's one of the highest in the industry, if I'm right, 4.47. And we will try to maintain, but there may be a small, this one going forward, because maintaining 4.47 is a different one. The year before it was just 4.04.
Okay. Mr. Krishnan.
So what is your guidance in the second half for your incremental cost of funds, your net interest margins?
No, my net interest margin will be above 4, will continue to be around 4 plus will be going forward, because there is a, as you know, that there is a pressure on the cost of deposits. While I'm able to contain, there will be a little increase, and so far I have not passed on much of the increase in the repo rate, which the ALCO of the bank will be meeting very shortly and will be taking a call on both the rate of interest on the deposits and also the advances. the guidance will be that my NIM will be roving a little above 4.
Okay, above 4. So let's talk about the expansion plans here. You recently got an approval from RBI to increase the number of branches. You have around 75% exposure to Tamil Nadu. So in terms of expansion plans, since there is a large exposure to Tamil Nadu itself, how do you plan to move away from this? How do you plan to get a pan-India exposure here?
Good. We are working on that branch expansion. Very recently, the RBI lifted its restriction, which was about 3 years in vogue. On 21st of October, the RBI has lifted. We are working out on the branch expansion, consciously taking into account the potentials available at various centers, and also keeping in mind, as you observed, that I have larger presence in the Tamil Nadu. But if I look into per se my number of branches and the branches that I have in Tamil Nadu, it looks that there is a large number of branches in Tamil Nadu itself. But when I look into the potential, business potential available in the state of Tamil Nadu, still I have a lot of places where I will be able to have good potential. But I will be working out with the open mind of a pan-India presence. I will be taking a paper to the board very shortly on the branch expansion, and I will come out to the media once the board is able to approve it.
Okay. Mr. Krishnan, thank you very much for joining us. I'm just wondering what happened in terms of margins. Just about every bank has announced a higher margin. For you, quarter on quarter, it's fallen. Why?
No, I don't find the quarter on quarter has fallen. 1 minute. Yeah, it has marginally fallen from 4.54 to 4.4.
Yeah.
It is.
No, I agree it's marginal. It's just that.
Yeah. But if you also look into the base, see, having a NIM of 4.54 is, I feel that a little this one. So that's what I was giving a guidance that what will be my NIM going forward. My NIM will be above 4 plus. That's what, because I was having very high. I have not passed on the repo rate increase much to my customers, which the ALCO will be taking a call very shortly.
Okay. Your operating expenses have fallen, which is very good, but is there more scope?
I am trying to have control on the expenses and also the optimizing the expenditure. There are little scope on that. I don't say that there is no scope, but there are little scope which will be doing it, the cost control measures.
Okay. So the other point was, of course, deposits. I know you've spoken a bit about it. That again is a quarter on quarter fall. Why was that?
I will explain. See, basically, if you look into my CD ratio was only around 76% or 75%, which I have improved to 80% during this quarter. I thought that I should utilize the funds which is available with me in a better one. So that is the reason. If you look into within the deposit, my CASA has grown up. My CASA has grown up. So that is the reason. Going forward, yes.
Current and savings account are up year on year, and even deposits are up year on year by 5%.
But quarter on 5% year on year.
No, compared to the previous quarter, even the current and savings account is a little lower, slightly lower.
Marginally has come down.
Yeah. So is it becoming difficult to get deposits? Why is it a problem?
It is not that it's becoming difficult. I have not increased as far as the term deposit is concerned, I will be able to. And if you look into the quarter on quarter, the CASA was 13,246 crore and it is 13,192 crore, which is a flat. I don't look that as it has fallen down.
No, it's only a marginal fall. It's only a marginal fall, I agree. But it's not risen, which is an impediment to growth, isn't it? It's only if you have more deposits that you can lend a little more freely. That's why I was asking if there was a problem collecting deposits. And now if you embark on, what's the kind of target?
There is no problem in mobilizing the deposit, and rather I look optimistically that going forward with the branch expansion, which the RBI has now given the permission to us, I'll be able to have more footprint, which will also enable me to improve the business.
Okay. Is it likely, therefore, that as you hunt for deposits, your margins may come down further because you have to offer more attractive rates?
the net interest margin may come down little because my base is very high.
Okay.
You will agree that having a net interest margin of 4.47 or 4.5 sustaining will be difficult practically.
Yes.
While efforts will be made, it will come down.
Okay. Just a word on your gross NPAs. That is also flat. One would like to see it falling. What is the sense? What is your SMA 1, SMA 2? What levels do they stand compared to previous quarters?
See, if we look into why it is flat is because of one single or two accounts which have fallen due to some technical reasons, which I am likely to get it upgraded very shortly, which will show the declining in the gross NPA. That is what it is. And traditionally, if I look into the recovery pattern and the upgradation pattern in my bank, the second half seems to be extremely good as far as the recovery is concerned. Coming to the SMA, out of the SMA, what is the slippage if I look into is minuscule, while my SMA book continues to be SMA 2 is around 900 crore or so. But the slippages are contained much. The credit cost, you would have seen that it is just a 0.27%.
Okay. All right, we'll have to leave it at that. We will invite you again for a more detailed discussion. There are lots of results that are pouring in. Thank you very much, Mr. Krishnan, for joining us, and all the very best.
Thank you. Thanks a lot.
Okay. Well, that's with Tamil Nadu Mercantile Bank. You can't complain with the results now, and they've also got the branch expansion permission. But the true test will come in the quarters to come when they have to get more deposits.
Well, it seems to be a lot of the smaller banks which are flourishing. We have RBL Bank, which is also up around 10% odd. South Indian Bank did very well post its numbers. And now we have Tamil Nadu Mercantile Bank, as you can see, doing well in today's trading session. Thanks, Lata, for that. We need to take a short break. But up next, we will be speaking to the Managing Director of Balkrishna Mines to discuss the company's second quarter performance. Stay tuned.
Welcome back. You're still tuned into Midcap Radar on CNBC-TV18, and as promised, we'll focus now on Balkrishna Mines on the back of its second quarter results. Strong set of numbers, 19% jump in revenues and a healthy increase in margins as well. The stock, though, has fallen from the top, some profit-taking coming in there. D. Ram Reddy, who's the Managing Director of the company, is joining us now for the same. Mr. Reddy, good afternoon. Thanks a lot for joining us. Well, it's a very strong margin number that we've seen this time around, a 300 basis points increase on a YY basis. Can you tell us what led to this? Was the top line growth driven by volumes, higher realizations? Has there been a change in product mix?
See, this is because of the capacity utilization. Some of the plants, the new plants have come up, some of the wood plants also have utilized higher capacities. And also the product mix. See, I am telling right from the initial, because of the various products, we have almost 20 odd products. If suppose some product is not doing well, there is definitely the other products are supporting. So because of the products mix today, I can say we have done well in spite of the difficult times, tough times in the worldwide for the pharma API industries. We have done 627 crores on consolidated basis as against 525 crores last year for the same period. And for the expansions also, we just recently completed one expansion of the dimethyl carbonate and propylene glycol, which is about 30,000 tons, which we add in the coming quarters for the top line and as well as the bottom line. There are many other products in the pipeline for the expansion, which I said in my earlier interview, like methylamine. We already geared up construction. Probably in coming 7-8 months, you will see the expansion of the methylamines with about 30 to 40,000 tons capacity of the methylamines. And we also put up the papers for the ACN, DMF. These products, we have put up the papers for the government of India, for the clearance. Probably the moment we get, we will start up the
Sure, Mr. Reddy, you did mention your capex coming on stream, your DMC plant, and that was expected to be operational by August 2022. You had said, or in your previous investor communications, you all had mentioned that at peak capacity utilization with your capex, it has the ability to add around, I think, 250 to 300 crores per annum in terms of revenue. What is the capacity utilization at this point? When do you expect it to get to the peak? And what is the revenue addition that we are expecting from this fresh capex which has come on stream?
This is started just last month only. There was a delay, about 4 or 5 weeks delay in the plant commissioning, and it is started in full swing now. Probably in coming 2 quarters, you will see by end of the year, you will see it will go into the full steam. And in a peak, when it goes full swing, 250 to 300 crores top line will definitely add for the existing revenues. And that we will see in the next year onwards. This year we will be having only half year of the operations, maybe 100, 120 crores we can see from this plant. And in coming months, as I said, yes, we are coming up with a new methylamine plant. We have we applied for the environmental clearance for the acetonitrile, butylamines, and DMF. These are all there in the pipeline. Maybe by 24, 25, you will see all these plants in the stream. By end up to 2025, you will see all the 4 plants will be in full swing, whereby we are aiming for the more than 4,000 crores annual revenue from the existing 24,000-2,500 guided revenue on consolidated basis.
4,000 crore rupees of revenues by FY25 from the new products. And will that add to your margin profile as well? Because a lot of new products that you are adding there, something like a DMC, it is a high margin product. You will be able to increase capacity utilization here as well. What does it do to your margin?
See, here for any chemical industry, first 1 or 2 years, it will take time for the going to the peak level of margins. But at any point of time, for our type of products, for these specialty type of products, I can say 24 to 26% EBITDA is the sustainable EBITDA. Even though today we will say 28, 26, more than 28% years, even in some of the times you will see 30% EBITDA, but those are not the sustainable. Those are the opportunities. Sometimes you get the opportunity, we got the higher margins. But definitely I can say 24 to 26% is the sustainable margins for the coming years.
Okay. What is the update with regards to Balaji Specialty Chemicals, sir? When can we see the IPO?
It's difficult to say right now because we have filed the DRHP. I cannot talk on that because of the certain restrictions on the regulatory part.
What was the revenue from Balaji Specialty this quarter? You had guided for 700 to 750 crores this year.
This quarter, we have done 221.71 crores for this quarter. The half yearly, we have done about 400 plus we have done for this quarter.
Okay. Okay. So that is about Balaji Specialty. I wanted to understand your DMF facility utilization as well. It was 50% in Q1. You had guided for it to be ramped up to 70 to 75% in FY23. Where does it stand in Q2?
Yeah, it is on the track. It is almost 68, 70% we are doing. And coming by end of the year, you will see more than 75% operations for this DMF plant. Again, subject to the market conditions from the import point of view and raw material point of view.
And
environment for the API and pharma industry.
Okay. So for your raw materials, methanol, ammonia, are the prices stable? Because you spoke about value-added products, a change in product mix leading to higher EBITDA margins, but no problem on the raw material side for you, right?
As of now, yes, they're all stable. Methanol and ammonia, at least, they are stable. Past 6 months, they're at one place. It's not very volatile unlike other raw materials.
Going to leave it on that note. Thanks very much for joining in and speaking with us. That's Balaji Mines. Good numbers, but nonetheless, the stock is a bit subdued right now, so down around 3.7% currently for Balaji Mines. We need to take a short break. Before we do that, here's some great news for our investors. You can now track the US market action in real time on Money Control. Log on to the website or the app and stay informed about all the matters in the global markets. Welcome back. Well, let's focus on a couple of more stocks. LT Foods is in focus. Sources tell CNBC-TV18 that PE funds may be in the race for acquiring a significant stake. Vivek Iyer has all the details.
Well, the stock in focus is LT Foods. Now, what sources indicate to us is the fact that, PE funds are in the race to acquire a significant stake in the company. And what we understand also is that this particular stake acquisition that may come in may actually cause the management of the company or the management control equation to actually change. Now, if this particular acquisition does happen at the significant premium that we understand that could happen to the current market price, it would actually trigger an open offer as far as the stock price of LT Foods is concerned. So that's another important trigger to keep an eye out for as far as LT Foods is concerned. More importantly, the PE fund that does come in, what will be the target and what is it that they're looking for from LT Foods is the other important thing to track. Now, interestingly, the company has actually gone ahead and given a notification to the exchanges on October 25th. What they've said is that the board meeting is going to be held on 31st October, and this is mainly to consider fundraising as far as LT Foods is concerned. They're also going to discuss future strategic plans, and along with that, we'll be discussing reorganization of shareholding framework of subsidiary companies if required. So we reached out to the management of LT Foods. We sent an email to them. We are yet to receive a response to the email that CNBC-TV18 sent to them. It's going to be interesting to wait and watch what exactly is the outcome of the meeting on 31st October, and LT Foods will continue to remain in focus till then.
Oh yes, it will, up 1.5% today, but has been an outperformer in the last couple of days. Vivek, thank you so much for joining us with all those details. Well, with that, we will take your leave on this edition of Midcap Radar Mutual Fund Corner when we return.